another big story is the fact that Lagos State has officially announced it's joined the League of Oil Producing States, Ajay Field, where the oil has been located is offshore of Lagos, has the capacity to produce at least 12,000 barrels per day. So we're talking about that just before we start talking about domestic commodities with Okpeyemi. She's here with me in the studios. Good morning to you, Okpeye. Thank you so much for coming in.
Harriet.
So Lagos is now officially an oil producing state. What does this mean for the oil and gas landscape as a whole?
Well, looking at what we're expected to produce in Lagos State is just about 12,000 barrels, but they also expect the inflow to increase over time. So that's good news in one sense. But at the end of the day, if we're looking at what's happening in the Niger Delta region with the Niger Delta militants and the attacks they've had in recent times, you have the Forcados pipeline that's yet to be repaired, and as at yesterday, Shell said that they doubt if it's going to come back into operation in June because the repairs to be done to that pipeline isn't exactly straightforward. It's a bit complex, so it might extend beyond June. And then, so you have 250,000 barrels. Currently, Nigeria's production is about 1.65. But if Lagos is coming in with 12,000 and we expect them to increase, their production capacity is about 40 to 45,000 barrels, which is not so high, but it's something, and it could help pacify the shortfalls we're seeing in the Niger Delta region. But at the end of the day, looking at the southwestern, having Lagos being an oil-producing state is a positive indication that there's a possibility that we could also get oil from other southwestern states along the coast, for instance, Ogun State. So this might probably attract investors because the company that found the oil in Lagos was actually a Nigerian company, it was an indigenous company. So we might probably have foreign multinationals come and drill oil in all these other states and increase investment in that area. But given the fact that the oil price environment in the international market isn't exactly so buoyant, we might not expect investment to come.
Yeah, because you'll be wondering what impact this will likely have on export, for instance, and pricing, like you've just already mentioned, but most importantly, logistics.
Well, in terms of exports and in terms of pricing, I mean, it's good for Nigeria, for one. I mean, we could earn more revenue on the new production in Lagos. But if you're looking at what we expect so far, it's just 12,000 barrels per day. This isn't exactly a significant amount compared to what we look at, what we see in the global market. And it's a start, definitely, it's a start. And currently, what we're seeing in the global market, we're seeing a shortfall of about 3.75 million barrels due to the outages in Nigeria, in Venezuela, as well as Canada. So 3.75 million compared to 12,000, it's not exactly going to contribute to the supply good, because presently, right now, we're having a shortfall in the international market.
Yeah, talking about the international market, reading this morning from Energy Information Administration, shale oil output is expected to drop in June for the 8th consecutive month. What impact is that going to have, if any, on prices or even for those who buy the product?
Well, if output it's at the end of the day, it's back down to your supply and demand dynamics. If we're seeing a shortfall from shale oil, this is definitely good news for the energy market in the sense that it will also push up prices. But bringing it back to Lagos, just adding one more point in terms of the implications of finding oil in Lagos. For one, we know that Lagos is in terms of population, we're about 21 million people in Lagos and growing. And we know our population density is about 4,000 persons per square meter. So in terms of looking at environmental damage of having oil production in Lagos, it's already a populated region, and then you're bringing in oil as well. So the government needs to make sure that we ensure that the environmental situation is managed properly, so we don't have the same incidents with the Niger Delta region, because we're starting off on a clean slate now. We need to get the compensation fund right with the 30% derivation fund that is given to the oil producing states. We need to make sure that we compensate people living within that region appropriately to ensure that we don't have some level of insurgency emerging again in that region.
Apart from that, to protect the environment from being degraded, because that's one of the issues that they're battling in the Niger Delta now. Their waters are polluted, their farmlands are also polluted. So the government needs to come up with a plan to make sure that these people are protected. So we're turning our attention now to domestic commodity. We're talking about rice, we're talking about tomatoes, and of course how all of what's going on right now is affecting the price of commodities at the market. Yesterday, National Bureau of Statistics released the headline, the inflation data for the month of April, and we saw headline inflation at 13.7%. The food index is at 13.2%. So let's continue our conversation with Opeyemi, who's still here with me in the studios. Opeyemi, these numbers were actually expected, and I remember Financial Derivatives Company actually did a forecast predicting that it could reach as high as 13.
Yeah, so forecast was 13.2%.
13.2%, but we're seeing it at 13.7%. It's not it's not a laughing matter, even though we know that it wasn't exactly how food prices are right now that contributed to the increase. We noticed that it was mostly imported items like kerosene, fuel, and spare parts. But taking a look at these numbers the way it is, how quickly would this, or how soon will we see the impact on food prices, for instance? And I think we should start from there. How soon will we see the impact on food prices?
Well, looking at this season in general, this is an off-season period where you usually have seasonal changes and we usually have an increase in prices. So generally, food prices increase between the period of May to June because of seasonality. So having inflation rates at about 13.7%, also having your fuel scarcity that happened in April, coupled with the dollar scarcity, this is definitely affecting food prices, because this is increasing the cost of living, is increasing the cost of production, is also affecting transportation costs, and this is filtering into food prices. Now, your question was how soon would we see it? Well, we're already seeing it in food prices are already going up. Tomatoes on a normal on an average during this period, it usually goes for around, say, about 10,000.
Yeah, but then everybody was attributing
it's about 40,000.
Everybody was attributing that to the fact that, you know, you couldn't get vehicles to bring these tomatoes from up north where they're mostly grown. Yes. So yes, it ties in very nicely with the inflation, you know, data that, you know, because of the increase in kerosene, PMS, and of course spare parts. But then, you know, there's also talk that by next month, the food prices, as we see now, will be the ones that will actually drive the inflation numbers higher.
Yes, and this is because of the seasonality effect I mentioned earlier on. We usually have this off-season period where food prices go up between the month of April and the month of June before they start filtering down. But looking at this period is particularly peculiar because we have both dollar scarcity and we have fuel scarcity, and this is like doubling the impact of the off-season period, and that's why you would see that food prices will increase even further. And then looking at the labor unions that are about to bring up a strike tomorrow, if it does happen, most people are already feeling already having negative sentiments about this, and they are, you know, stocking up their homes with food, which is increasing demand in the market, and this is also filtering into prices in the market. So looking at food prices at this period, it's generally expected for it to be inflationary.
Is there anything that could, you know, probably stave off the crisis that we see coming with regards to food prices?
Well, generally, if you're looking at food prices at this point, it's a matter of supply and demand, and you know your supply isn't exactly the normal level at which it should be, and you have demand going up as well, and then you also have the cost going up. I mean, the average price of oil in the month of April was 163 naira per litre, according to the NPS report released yesterday. Right now, all prices are petrol prices are about 145 naira for a litre, and this is making this brings to us the fact that, okay, if in the month of April, even without the government imposing a band to the price of petrol, it was already 162. What's the potential that we wouldn't even see average petrol prices increasing in the month of May all over again, coupled with the fact that most of the oil importers, rather petrol importers, are complaining that they don't even have access to the dollar to import this petrol. Most of their products are still stuck in the storage facilities, or they're still stuck on sea because they can't even bring them in until when they pay the merchants that they are purchasing petrol from. So it still makes us worried that even with this new price that has been adopted to help reduce fuel scarcity, the fact that the dollar scarcity still remains is still a threat to the fact that we could have fuel scarcity emerge all over again, so far as the dollar is not available to import.
Opeyemi, thank you so much for coming on the program this morning and, of course, sharing your perspectives with us.
Thank you.
We're going to be talking more about that new petrol regime in just a minute, so you can stick around and listen to the conversation.
No problem.
Business Morning continues in just a moment, and we'll be taking a look at the issues with regards to the new petrol regime. Stay with us.